Good morning, everyone. It's JJ from tradingsyndicate.org. Hope you're having a wonderful long weekend. It is Sunday morning. I'm doing the weekend update video. Um, Go take a look at the ES and see what we've got in store for us. Now, remember, we had month end, Thanksgiving, long weekend, a day of clearing that, we didn't get because Thursday everything was closed. So then we had that outage. There's a lot of stuff going on. Our upper target was 68.64 and a quarter. We hit 68.63 and three quarters. So pretty close. We're two ticks off. The levels are working. Now, that is the top of this range. So here's what we're looking at. If we accept, now acceptance is different for whatever time frame. Me, I only need a market to accept for 30 to 60 seconds for me to get my business done. If you're a longer term trader, market profile people say you need two TPOs, which means 2 half-hour periods, which means 1 hour, right? So if a market stays over a level for an hour, according to the market profile people and the work that's been done, uh, that's acceptance. Now, remember, don't take anything for granted. This market has massive ranges. So it could accept for 3, 4 hours above 64 and then come right back down. Now, I've got to say, I'm short biased because I feel that this markup was into month end. And, we have a gap. So there's a short position, and the shorts are just trapped. And you could see how they got driven up into a covering move into the end of Friday's shortened trading day, especially after the outage at the CME. So I am looking for a touch of 64 and a half, a look above and fail back down. If it accepts, then I've got levels for you to use on the upside. Of course, you can use these larger levels. They'll work quite nicely. If we accept above 68.64, your first target will be 68.74 quarter. And you'll find that the levels will be kind of useful for larger traders, longer time frames, that kind of thing. Now, the question I always ask after a month end is all short covering push, right? All you got to do, like any knucklehead knows this, all you got to do at month end is not sell, and the shorts will push the market higher. So when the shorts push the market higher, you bid above them, they hop you, you hop them, and price goes up. It's not that complicated, right? That's market making 101, right? That's kindergarten market maker, right? So if you know someone's short here, you go buy above them, they'll hop you, you hop them, they hop you. Then that process gets the FOMO longs in, and they're like, "Ooh, let's buy." So that's exactly what happened on Friday, right? People were jonesing for a trade. Hope they got it. We will be looking at all of this as our overnight inventory. I will look at Wednesday as the last full trading day. Okay. Wednesday is the last full trading day. This I consider all to be one big group of Globex. And so I'm looking to see if we backfill, we'll just use these levels. And if we can't take these levels out, it'll turn and go the other way, or it'll just go sideways, right? Pretty simple. But if we get down to the close of business on Wednesday, that'll be interesting. I would like to see this area backfill and try and fill this gap before we do one of these, right? Also, the structure here is horrible. Now, that doesn't mean it has to come down just because you built a house on a really crappy platform foundation doesn't necessarily mean it's going to fall down instantly. It might take some time, right? So be careful of that. Use 64 and a quarter. If we accept over it and and the offers start lifting, just don't short it until you find a seller, right? When you see a seller, then you can engage and then you got a place to put your stop, right? But if we do backfill, that would be healthy for the market, and that would go with the premise that short covering usually drives the market up at month end. Does it have enough real buying to sustain these higher prices, right? I don't know. Let's see. Going in the end of the year, right? We're not far from all-time highs. Our all-time highs are up here, so we don't have a heck of a lot of inventory above 64. And with that violent flush down, a lot of that inventory would have been flushed out by now. So if we do accept about 68, 64, that's something to don't be short. Now, half hour candles. You can see since the liquidation of the 20th, you've had a beautiful cost basis and then up into distribution. That distribution creates price stability. Oh, and then look at that beautiful lift. That brings buyers. Then you can take and look at how much they sold up here. Beautiful distribution, a little flush, look below and fail. Beautiful trade up to the next distribution. More distribution, more distribution. So if we do retrace, right, these levels will help. If we get above that 68.73 area, you're looking for 29, 69.29. Okay. But if markets are quote unquote normal and we took this up to create demand, we can go back and fill in that demand. Remember, the massive cost base is under 65.94. We have a lot of working room to give people a discount to make sure they come in and gobble up all that inventory. So if we retrace, look for bids here. And if that breaks, look for bids here. If that breaks, definitely look for bids here under 67.40. Okay? That's how you use a half an hour candle chart. And this is one of the most beautiful distribution charts I've seen. It is so precise. It is so mechanical. You can see the algos just, it's like almost if the algos were playing Mozart. It's just beautiful, wonderful, right? It's beautiful. It's price action in motion, almost like poetry, right? Very controlled. Look how they just cut the sell. They enter the buy there. They cut the sell. Two-sided back and forth distribution brings in short covering at the end of the day, fill them. Let's see if we can hold these levels when we retrace. So that's 46, that's 18. If we break 46, that'll be a good thing. You know, write these levels down, folks. Use them, right? Now, let's go take a look at structure, right? Can't get past it. So there's that 68, 64 quarter. We just two ticks away, right? And a poor high. What a thing. But we're using Wednesday's references because Wednesday is the last full trading day. Where's my previous day low? It's not there. All right. So let me just take care of that real quick. There's my previous day low, right? And so this is all that markup inventory, right? This is to make the books look super pretty. That's window dressing. Let's see if that comes back, right? If it doesn't, then just use the levels and there's going to be upper stops here, right? You know the drill, right? If it just keeps going and going and going. I'm looking for a backfill, 68.31, one of the very first places to take a look, right? Those single prints, right? I left them there even though they filled. Look how responsive the trading has been. I'm just leaving them there for reference. There's still shorts that are trapped there because if the shorts still weren't trapped here, the bid would not have moved this way. That's why trend lines go like this or like this. When trend lines go like that, the offer is moving down. When trend lines go like this, the bid is chasing the offer. The bid is clearly chasing the offer here, right? Sellers are in control. They're raising price, right? No buyer wants to pay more, right? When price is going up, buyers are not in control. Only an idiot wants to pay $10 when they can pay 5. So there is still a bid under 31. That's your first place to look on retracement. Okay. Balance zones for the evening. I am using, there's a cost basis between 34 and 45. I know, yes, it's big, but the levels seem to work. We're in 2 times profit up here in the 57s. Once again, look for retracement. That 31 will be just underneath cost basis. And you can see, look, when it dipped under 31, whoa, there's a bid. Hello, right? Every time we go under that level, whoa, somebody's eager, right? They keep testing it, but there's definitely buyers under 34, 31, 32. They're all there. They're in the bushes. They're waiting, right? Let's see if they're still there tomorrow night or tonight. And that's pretty much it. Trades off the open? Yeah. Well, trades off the open, I would wait and see where it opens. Um, Definitely want to see if it opens above or below 54 quarter, right? And whether there's sellers at 64, right? If there's sellers at 64, you're okay to short down to that Wednesday high, right? That would be the first target. Why am I so short biased? Because I don't think the short covering is going to last into a new month, not at the beginning anyway, right? I could be wrong. I could be wrong. Wouldn't be the first time, right? If it, we have one guy in our room who keeps saying it's going to gap up. He hasn't said that yet, probably because he hasn't had his morning donut. But hopefully the curse of Raj does not apply and we don't gap up. That would be very nice. It'd be nice to actually get some normal liquidation so we'd get some better trading price action. Thanks, everyone. Hope you had a great Thanksgiving. If you didn't celebrate Thanksgiving, well, I hope you had some good time off and relaxed as we go into the next and last month of this crazy, crazy year. You're gonna have to be on your toes, okay? Something wicked this way comes. It's called year end. You got to trade smart, okay? If you want to learn how to trade smart with no gibberish and all this made up language that people use on social media, come visit us at tradingsyndicate.org. We also have an AI trading coach, which, gosh, I wish I had because when you ask questions back in the day, um, you get all sorts of crazy answers from people. It's like there's so much misinformation, and even general AI goes and scoops up. It's like a vacuum cleaner, it picks up all the dirt. Ours has been trained trusted sources only. So you're not getting trading information from some dude who used to be a waiter and decided he's going to be a trader and, is just winging it. Um, Trust the source. Always trust the source. And come see us. Have a wonderful, wonderful weekend. And we'll see you bright and early. 7:30 in the morning. UK time is when I do my first YouTube session. That is 2:30 in the morning for those in New York who are working the night shift or have insomnia, right? Maybe I'll start doing a night show for you folks, kind of little smooth jazz, something like that. I don't know. Anyway, we'll see you all there. The next session I do is at 9 o'clock Eastern time for the US market open. And I thank you very much. I'm JJ. I'm VWAP Trader 1 on X. And if you're a serious trader and you want to learn, come join us in our trading room. We don't charge a lot. And if you're really serious and you're interested in one-on-one mentoring, I do a lifetime mentoring program where I charge people just once, and then I'm with you every day as much as you need for as long as you need, working one-on-one. Give me a shout. I'm VWAP Trader 1 on X. Have a wonderful and safe weekend. We'll see you bright and early in the morning. Bye for now.